Founders, welcome back to the 0 to 5,000 podcast, where we obsess over the convergence of human potential and business results. Today, our hosts Drew McClure and Jordan Mitchell have another insightful conversation for you. So let's jump right in.
All right, founders, welcome back to the podcast. Today, we are joined by Remy Raisner. Remy is an entrepreneur, real estate investor, and author. He is the founder and CEO of the Raisner Group, a New York real estate private equity firm focused on Brooklyn. Since 2009, the Raisner Group has pioneered urban renewal multifamily investments in emerging neighborhoods of the borough. And today, to tell us about himself and his group is Remy himself. So Remy, thank you for being here.
Drew, thanks for having me. Congrats on the good work you're doing.
Thank you, my friend. So you're joining us from New York, correct?
That's correct.
And that's where most of your work is focused?
That's where 100% of our work is focused.
100%?
Brooklyn particularly, correct. The borough of Brooklyn.
Okay. So how did this get started?
So in a nutshell, I started a company a long time ago, 15 years ago, roughly, and basically in the aftermath of the financial crisis and the subprime crisis, since we're talking about real estate. And to make it short, I actually finished business school with a nice degree in finance, with an MBA, freshly minted and beaver-faced, so to speak. And except that it was the right major in the wrong environment, because the Wall Street was under a very big crisis, and ended up without employment, and also without visa, since I was an immigrant to the country. And subsequently, I bootstrapped a real estate investment company, starting by buying non-performing debt from banks that were failing, at auctions, fire sales auctions. Target Brooklyn, because at the time it was really very early, and it was an area where you could see a couple of things were going to change. So that's
wow.
Condensed version.
So what year did you graduate with your master's? Was it right then, 2008, 2009?
I'm a class of 08 finance grad.
Wow.
That leaves a scar.
Yes, absolutely. I was as well. I graduated from college in 2008, and it was a very different landscape to enter the job market than I thought it was going to be.
Yeah, I remember the Atlanta area also was very hit by everything that happened at the time.
Yeah, definitely not as much as right there in New York and Wall Street and that type of thing, but obviously it had ripple effects in the economy, across the board. So where did you, that's amazing that you had the eyes to see the opportunity for some of these fire sales and what you could apply, kind of pivot and apply yourself to. Practically, how did you make that happen? Young college student here as an immigrant, how did you even, find the resources to be able to take advantage of that?
So the resources were borrowed. I was able to borrow, very small money off a credit card to begin with, and then it became a little bit bigger. But listen, to tell you about the opportunity. So I was interested in real estate in general. My background's different, both in terms of geography. I grew up in Western Europe, in Paris, France, and I came to the US at 19 I was an athlete, as a basketball player. And I was a professional one in France prior to this. And eventually had an injury at 23, and I stopped doing that. And I pivoted very quickly by working for a hedge fund. I found a hedge fund at the time that was interested in people that didn't know anything about finance, and that were former athletes. So I checked both boxes, and I got hired.
That's a very specific box to be able to check, that they both know finance and former athletes. How did you find that?
Trial and error. Let's put it this way. But realistically, I was just applying to everything I could find that was finance related on monster.com at the time, which was a website that had a lot of these ads. And I was just, I was hanging out at the time with some people that were in finance in New York City, started telling me that I should look into it, that they liked people of my background, and it could be interesting. It's fast paced. It was interesting to get involved with. So eventually I found that one place, and things went well the first year. I made money, and the second year things were not so well, and I lost a lot. And I decided that I wanted more stability, and therefore I applied at the 11th hour to business school. I went up here, applied at Columbia Business School here in Manhattan, and I got admitted at not the 11th hour, but maybe the 15th hour, because it was really a couple of days before the intake. So I gladly quit my job, focused on business school, thinking I was going to finally be stable and go back to finance with more understanding of of the field and more, a little bit more analytical mindset. And eventually that didn't happen because of the financial crisis. But I developed a very keen interest in real estate from a young age, first of all, but even more so during business school. And I applied really for finance position related to real estate. I had an offer to work for a Wall Street bank as a real estate investment banker in a M&A group, and that offer got rescinded. So I ended up with no job offer, but I had some understanding of the field, some contacts, and I started networking my way through it, including with some classmates that knew the business. And eventually, so I just set up a company, first of all, to stay in the country. Because I needed the paperwork for immigration, and also at the end of the day, that's what I really wanted to do with my life. I figured I'd jump ahead and not wait and take the bull by the horns. So once I had this incorporated, I started realizing that the way to enter the real estate business might actually be different than what I thought. I thought I'd go and figure out a way to raise money and buy a building, fix it up, cash flow, and start, having some profits and start making salary, and it would take a couple months. In hindsight, I became educated about what was going on in the financial system, and specifically the banking system, and the subprime crisis, and all the balance sheets of the bank. And I became educated about potentially purchasing real estate bankruptcies, in particular the paper backing real estate, meaning the defaulted mortgage paper, commercial mortgages. And step by step, I reached out to some bankers. I got introduced to some others. It was easy to network at the time because nobody was really busy. It's like Wall Street had come to a standstill. It was a very different environment, or just the banking system had. It's like everything had stopped for a year and a half. It was very, very different, very different. And I was able to start visiting these banks' loan workout departments to study what was going on and study the paperwork backing the loans and everything else. And then figure out. And then I was offered to buy some of them, and I was offered to put forth some offers, which I did. And step by step, I found my way into this what was called the strike team of the federal government, the FDIC. Basically, the FDIC oversees the banking system, and the strike team was the team that went into the banks on Friday nights. And at that time, it was very, very quick. They went into the banks on Friday night, announced that the banks were shut down, told the staff that they no longer had a position within these firms, and took inventory over the weekend. And by Monday morning, fire auctioned everything. So,
wow.
So these people vetted me and qualified me as a buyer for the loans that were in foreclosure, in bankruptcies, or anything of that kind. And step by step, I bought some of these. That took me a long time. It really took me a year to make my first deal, and another 2 to make my first profit. So it was really a much longer period of time than I thought. But eventually, I bought non-performing debt. I self-educated myself a bit more on the law. Actually, a lot more. I really read a lot of books about this whole process, and I also teamed up with an attorney that I couldn't pay at the time because I didn't have money for a retainer, but agreed to take a piece of the profits to work together. And in hindsight, it was a very good partnership and relationship overall. He's still with us today, so I'm grateful for this. And
wow.
And that's how I got started. And fast forward after the purchases, some years, I was able through court to be awarded the properties, which were essentially in receivership. And handled by a court-appointed trustee and completely abandoned. I was able to finally become a landlord and took title to one building, then 2, then 3, and then built a portfolio. And to make it short, once the whole subprime crisis thing was passed, so Wall Street and everything else rebounded in New York City, the whole city rebounded. The distressed, so to speak, opportunities were gone, and I just started buying multifamily properties and assembled a portfolio in fast-growing and fast-changing areas of Brooklyn. And to this day, this is still what we do. We have over 60 properties, apartment buildings, and we have also about 20 commercial spaces. And we're big contributors these days to the changes that have been happening in Brooklyn, the positive changes. These areas have really come a long way and continue to. And in the meantime, we've contributed a lot to local urbanism, which I think is very important. We have a pretty long-term vision, so we can shape neighborhoods where we're involved, and that's very fulfilling. It's really
Sure.
an honor to some degree to be able to have this influence. And on top of it, we're contributing to the local economy by creating jobs. We employ local. And we try to bring interesting retailers that also spur the economy. It all snowballs in a positive way. So that's, in a nutshell, that's not so short.
So cool. So if we go back to when you were first getting involved, being able to buy some of these defaulted mortgages and loans, before you actually got those properties, fully, I guess, yours, and you became, like you said, a landlord, how are you actually turning a profit? Like, where does the revenue come from if you just are buying the defaulted mortgages?
So there's no profit. It's all paper profit. There is no cash profit, which is what, that's why I mentioned to you, it took a much longer time than envisioned for me to just even have a salary and live off this. That was a long process and also much longer than expected. Like I said, I was expecting to buy a building, fix it up, cash flow, have some money. It's a basic real estate entrepreneur thought. And it didn't pan out this way, and it panned out probably a little bit better. But the process is really multi-year. It's multi-year before you make a profit. It took me 3 before I really made a profit. That was it's like crossing the desert at the time. It was a very long process. It's longer when you don't expect it, but it worked out. It worked out okay.
How did you practically survive? And then also, how did you keep your hopes up while you're waiting longer and longer than you anticipated waiting?
I survived by a combination of things, primarily borrowing money. First of all, I was able to borrow some money off a small credit card line. That was a good friend of mine. That was actually a former teammate, a basketball teammate, arranged a small business line of a credit card with the local bank that I used. So I had cobbled some investors together to make the first loan purchases. And these investors were in Western Europe and denominated in euros. And the exchange rate was the highest at the time it's ever been. In 08, 09, it was about 1.6 at some point. So to the US dollar. So fast forward a year or two, that exchange rate went to 1.2. They had a big currency gain. At the same time, the loan collateral not only had gained in value, but also the accrued interest had accrued more. And I was able to borrow against that debt that I had purchased, cash out the investors at a big profit,
wow.
and eventually, own the whole investment myself. And along these lines, basically I floated myself through borrowing until finally I was taking possession and awarded the building. And then once I fixed them up, I had some cash flows. I was able to borrow more again and whatnot. So I borrowed several times during that.
Wow. Did you feel pressure as a result of the situation, kind of doubling down, or did you have a different mindset about it?
No, it was a lot of pressure. There's no doubt. It was a lot of pressure, which was part of the game. But to some degree, I came up with this business plan out of necessity. I had always wanted to be an entrepreneur, but I came up with this out of necessity because of my circumstances. And I didn't want to go back to my home country. I wanted to stay in the U.S., stay in New York. So what I'm saying, these business plans and business in general is harder to put together when you do it out of necessity. But at the end of the day, I tend to be pretty solid with my back's against the wall. Actually, I tend to do my best when my back's against the wall. So I did feel a lot of pressure, but no pain, no gain.
Yeah, that's right. Do you feel like your background in sports, or even just your background growing up in a different part of the world than here, has aided you in some ways? Have you been able to take any lessons or mindsets or attitudes and approaches towards your business life?
Absolutely. Listen, my sports background at the end of the day taught me a lot of things. You have to overcome adversity, whether you're playing soccer or boxing or whatnot. You have to always come back, and you're tested mentally every single gain more practice. So 100%. It's been one of the best schools in my life. In terms of the business schools I've been to in my life, sports has been a very good one. Immigration is another very good one because you really have to be resourceful and be able to survive and figure things out. And then just generally, business school where I went, obviously I'm very happy with, and generally just living in the New York City environment, just what goes on, the activity, the people you meet, that's also been a great school. So all that combined really just helped me handle pressure and develop, network, and just help me grow. And I continue to be in this mindset, and hopefully I never stop.
Yeah. I always talk about sports. If you had the privilege of playing sports, even at a not even a high level, it's just such an amazing workout for real life principles, right? Where you get to experience teamwork, you get to experience setting a goal, setbacks, hard work of slow progression over time, right? All of those things that are just kind of part of life if you're moving towards anything ambitious, right?
Correct. It's you and yourself. It's being in sports, whether you're a runner or a tennis player. At the end of the day, you're running your own company to some degree. It's you and yourself and your results.
Was it difficult for you? You've had, as I listened to your story, you've had several big transition points. One coming from Europe to America, coming from professional athlete to business school, from business school and one focus to changing the focus from finance to now real estate. These are huge kind of pivots and transitions. Were those transitions difficult at the time, or again, were you able to kind of just flow with that a little more naturally?
It was extremely difficult because most of these transitions were forced upon me, so to speak, even though I don't like to think that way. But I finished...
Like the injury.
Correct. I stopped playing basketball because of an injury. I was 23. I had hopes to come and play in the NBA, do these kind of things. I was very far from that and from the NBA draft or anything like that. So I just, at some point I just realized it's better for me to go another route. But that was tough. It was not the plan. I had no backup plan. After that, pivoting to Wall Street was great, but I took a big loss my second year there. I was pretty much forced to go to business school. That was also hard. And then finishing business school during the financial crisis, that was also unexpected. It was a setback after. I mean, look, all of my 20s, I never made $1, basically, pretty much. I kept picking myself up, whether from sports, from my Wall Street career, from business school with a different set of expectations at the end. It all worked out for the better. But that part of my life was overcoming some challenges, and I think it's helped me shape things from here on. And I like to think I'm ready for any challenge that comes our way, and nothing is ever to be taken for granted. So
sure,
we've just been training, so to speak.
Did you have family and friends back home thinking you were crazy, saying, "Remy, come on back, man, like you tried, it didn't work"? Or were they, maybe it was a little bit of both, or were they saying, "You got this, stick with it"?
No, actually, I had a lot of support, and I'm very grateful for that. I have very, very strong friendships back home in my mother land or here in the U.S. I've been here for 24 years pretty much. I've been lucky to have very, very strong friendships, and to some degree they encourage me, and that's valuable. And actually the friendships got so much stronger.
Absolutely. So good, man. So fortunate. I mean, a little bit is on your end, attracting the right people and building a good friend group, but to have a community support you, especially during tough times or when you're going for something that could seem scary or risky, is such an asset. And it's the opposite if they're pulling against you, right? If they're saying, "What are you doing? Like, play it safe, come home, lick your wounds," right? So very, very fortunate and grateful to hear you had a community supporting you.
Yeah, that's people at the end of the day are your best asset in life in general.
Yeah, I mean, much of your story you even talked about, again, credit to you, but knowing how to use your network, knowing who to call, knowing how to, find the right lawyer that's willing to work a deal with you on splitting the commission versus the retainer, talking to people on Wall Street to get you into the banks. Like, those are very resourceful things you're doing with your community as you're building it here in America.
Yeah, it's great. And at the end of the day, if you can handle it the right way, your community and your relationships get stronger. And at the end of the day, there's nothing more important than relationships in life. It's how it is. It's not just business, it's life.
Yeah. If you had to start again, like let's imagine you had to start in the same business, for whatever reason you lost it, but you're starting today instead of starting in 2009. How would you start? And my question is just for people listening that might be saying, man, I think I want to go into real estate development or investing. What would be the first couple of things you'd be thinking about and starting to do?
So it's a very good question. Listen, the first conclusion I came to at the time, and it's still valid today, is I wanted to be in an environment I really know. I wanted to be in real estate is a local business. I wanted to be in an environment I really know. So I know New York City. So if I had to start back today, I would still start in New York City and in Brooklyn, because Brooklyn is such an opportunity. It's really, it's been the opportunity of a lifetime for me. It continues to be, and I don't see that changing. To be quite frank, it looks as bright as ever. Just to give you some numbers, not to get too technical, but Brooklyn, on a standalone basis, the borough of Brooklyn is 2.7 million people. That would make it the fourth largest city in America on a standalone basis. Actually, I think it just bypassed Chicago this year. So to some degree, Chicago is more populous than Brooklyn is more populous than Chicago as of this year. It's very impressive. It's growing leaps and bounds. It's becoming not only a cultural center but a tech center as well. You have really major companies are setting up shop over there. Like Netflix is opening a big studio. You have other studio facilities opening. Amazon Music is headquarters over there. Many things. Vice Media is over there. It's really it's a prominent place. It's just in the shadow of a more prominent place, which is Manhattan, which is the most prominent place in the world. But Brooklyn's changing a lot. The population is back to an all-time high. You had a big arc circle. It was 2 million in the upper 60s, in the 60s, and now it's 2.7. So back to an all-time high after the depopulation of actually all American urban areas back in the 70s with what went on throughout the country. So that's number one. I would tell people to in the real estate business to go where they know, to get involved with things that they're familiar with. Number two, what would I do today? Otherwise, I would not be buying bankruptcies and non-performing debt, even though you have a few here and there. There is a real estate crisis these days. The commercial real estate lenders have a lot of bad loans on their books. As a whole, the commercial real estate industry is not doing great for the last 18 months, mostly because of changes with interest rates that have pretty much doubled. That's impacted a lot of people. And also because of changes primarily into the office market with COVID and work from home, really societal changes. So a lot of office buildings have become obsolete and are no longer able to have tenants, and therefore are going into foreclosures or bankruptcy. But that said, you don't have yet a massive flush of the financial system like you had in 2009 or 08 or 2010 and whatnot. It's really more slow play this time around. It's a bit more similar to the savings and loan crisis of the early 90s. That was primarily in Texas, but still nationwide. It's more slow played. It will continue over some time. But as of today, the reality is, if you look well, the apartment building markets in New York City is doing very well. It's very strong. It's the same case in some other coastal cities. It's a little bit different in other areas, particularly the Sun Belt, where rents have been a bit weaker and there's been more construction. Here in New York, we've had pretty much, as little construction as you could have in 10 years. And people keep coming back to the city from after COVID, and we have we have population growth, but we have no inventory. So the fundamentals of the business are good. And I would not, I would just start looking at that and looking at how, you can really get involved with properties that you can fix up and deliver very high quality apartments, especially very close to condo quality apartments, because the market, salaries are up. The cities are creating a lot of tech jobs here, and you have a lot of young workers that want very high end products for rent, not to buy, which is what we're involved with. And as a consequence, you can really make very interesting returns. Just buying apartment buildings that need to be upgraded, and especially if you're able to turn that around fast and you can refinance afterwards, the business plan is pretty solid. So I like that. I like that business model. That's what if I had to start today, that's what I would start with. I would try to understand also, what tech can be used to manage these properties, whether it's like keyless, door systems or property management systems or payment systems or whatever kind of systems can make sense to really modernize the business. It's a business that has a lot of opportunities to be modernized.
Yeah, that's so good. That's such great advice. And I especially love, the technical part will make sense to anyone who's really thinking about this, but just even the business principle of starting where you know, right? It's like, hey, there's going to be so many unknowns in any business. If you can take some of the unknowns out of the equation by starting with something in an area or demographic a customer that a problem that you're familiar with, is such a leg up just to start there. So that's such great advice. I'm curious, sounds like 15 years of doing this, do you look back at any game plan mistakes or strategy mistakes that you're like, oh man, I would not make this one again?
Absolutely. The biggest I can think of is, I got involved in buying that, and then I became really an investor and owner of properties through my company, let's say, 2011, 2012, 2013. And then the Brooklyn market shot up. And I got a little bit taken aback. I stopped investing for a while. I stopped buying anything. Everything looked too expensive. But in reality, it just went up and up and up. And it was a real urban transformation. Not only the market and the interest rates were low, but really, like on the ground, you could see stores opening, positive momentum. You could see a lot of retailers looking to come to Brooklyn. Just really a lot of very, very fundamentally good things. So the price and increase for the bricks was really justified. So I stopped investing for almost a year. I was just taken aback by the pop in the market, but that was based on lack of experience. I didn't know that the market could behave this way. But as a matter of fact, Brooklyn's done that a couple of times over the last 15 years.
Wow. Makes total sense. Something else you mentioned is the involvement with the community in terms of just even knowing what's needed, what's wanted here versus throwing in random buildings or businesses. What does that look like? How do you cultivate that intelligent relationship with the community to even make sure that we're bringing in and investing in things the community wants or benefits you and them?
Well, listen, it's a very simple, when you think of it, it's a very simple blueprint for a lot of real estate investors who are really locally involved, which we're hyper-focused really on 4 parts of Brooklyn, 4 areas. And, first you buy apartment buildings and you become, you see the applicants, you see the tenants who come in. And, the apartment buildings are pretty resilient in terms of returns and, cash flows and whatnot. It's pretty regular. In a city like New York, you can always tenant an apartment building at the right price. So you do that. You're an investment company. You buy your first building, then a second and third. You see who comes in, who applies for the units, what they do, what's their profile, salaries and whatnot. And then after some time, you keep buying those, and you see an evolution over a couple of years. You see, okay, these are the people who are moving into the area. These are the type of people they are. This is the type of jobs they do. You can think, what do they want? What do these people? What's their consumption? Are they younger people that are? Do they have families? Do they not have families? Do they want restaurants? Do they want to go out? Our neighborhoods are primarily young professionals, not yet so many families. So you could tell at some point, there was a real shortage of restaurant, bars, art galleries, just local businesses that cater to young professionals. So once you witness this with your firsthand data, the next move we made was to start buying limited retail units, but mixed use properties with we're apartment owners primarily, but we have buildings where up to 20% of the income is commercial. And we started doing that, specifically corner buildings that have a lot of visibility and really give a feel to an area. So once you have this data in hand, you know that the next thing to go is the retail. And not only you know that you can expect these rents to do well, but also you know what's missing in the area. You know that if you open, for example, right now in Bushwick, there's a need for wine bars. You know if you have a tenant that comes, or you can attract a wine bar, you know that's going to do well. You know it's going to add to your area. You know it's going to create jobs that will hopefully be stable. You know they're local jobs, which is an important thing. But also at the end of the day, you know when you have certain size in an area, by doing this, you also protect your portfolio. You protect yourself. You protect what you've built. You protect the tenancies in the apartments, and you protect your area in the sense that you're able to bring in the services that people want in order to live happily in this area, and more and more.
Yeah. So yeah, it's you're self-interested in a good way to bring more value and desirability to the area, because you're owning the places that people live. So to keep occupancy high and people wanting to be there, it serves everybody involved if you're bringing in the right businesses, right?
Yeah, listen. First of all, I always look at things as a win-win situation, which it is, and really, what matters for us is we're happy if people are happy in their units. The neighborhood does well if they're happy in the units. It does well if you create good construction, quality constructions. You give people quality of life. In New York City, you're gonna laugh at this because in Atlanta it's very different, and most of the year is very different. But in Manhattan, for example, most apartments do not have a washer dryer.
Wow.
And we have this in every single unit that we build in Brooklyn, and a dishwasher as well. In Manhattan, you just don't have this. And Manhattan
Why is
apartments
that?
are smaller because it's always been like this, which is not an answer. But primarily because listen, what's happened in the real estate business in New York is really up to, let's say, 10 years ago, you really only had Manhattan to live. As a desirable area for young professional, whatnot, and then Brooklyn opened up, and other parts opened up, some parts of Queens, which is another borough, Jersey City to some degree, which is across the bridge in New Jersey. And what really happened is because up until 10 years ago, you only had Manhattan as an option to live. To some degree, landlords were a little bit complacent. A lot of real estate was passed on over generations within some families. You didn't really have an incentive to innovate. You didn't really have an incentive to. It's definitely not a monopolistic situation. But if you have such power on the market, you're not forced to bring tenants to you. And Brooklyn's different because a lot of the ownership of real estate in Brooklyn is entrepreneurs, first generation immigrants, first time entrepreneurs, or just people that understand the need to bring tenants to our areas. We understand the need to bypass ourselves, with amenities, with finishes, with quality apartments, sizable apartments, outdoor space. Our company actually pays broker fees. You're a tenant, you want to move in to one of our units, we pay the broker fees. It's different in Manhattan. So for those who don't live in New York, this might be a little abstract, but for New Yorkers, there's a very, very big difference living in Manhattan, living elsewhere. And what I just mentioned is one of these.
Yeah. Well, what I like about it is every business is faced, well, not every business. If you're in the luxury of having a lot of demand, you can get away with doing the bare minimum, right? But if you're wanting to grow, really grow and impress an audience and create more value, you do some of those things that are over the top in a sense, like creating extra amenities, luxuries, thoughtfulness into your development instead of like, well, no one else has washers and dryers and that saves us money, so we're not offering that either.
Absolutely. And it's if you're in the business, especially of creating new things, opening up new areas, it's a lot of principles in that book, Blue Ocean Strategy, apply to this kind of business model. If you ever heard of this book, it's a good book.
Yeah. What did you like most about that?
Really, that mindset that it's very logical at the end of the day, but you want to open up new markets, you want to create new things, you want to try new things, and then sometimes the opportunity is very obvious, but just doing things a bit differently pays high dividends. But more than that, more times than meets the eye, the opportunity is just there right in front of us. But it's scary to do things in a different way because you're not validated by the market, so to speak, right away. You're not validated by people in place. You can spend money, invest money into properties if you're in the real estate business or anything else, if you're not the business, without obviously knowing that that the investment will be successful, that it's gonna pay off. But at some point, if you know the right signs, if you know where to look, if you know the right places, if you're really involved in your business on a granular level, you see these things. They're right in front of us. All the opportunities are right in front of us. It's just a matter of seeing them, looking at them the proper way.
Yeah. Well, that actually, where that leads me to think is you've got investors, and is that difficult if you're taking a chance on something, doing something a little different with investors who might want the conservative play on cash? But I was already want to ask you about that anyway. So let's back up. What are some things that you've learned about attracting the right investors, and how do you have a good relationship with them? Because you've done this now for almost 2 decades. How do you keep a good relationship with investors, a win-win for each other?
Well, thankfully, the easiest way is to have good returns, which we've had, and also we've been very early and have extremely successful investments in Brooklyn. I hope that continues, just from being early and not selling our assets. But listen, in general, if you have the right investors, they will understand your business model, at least to some degree. They will trust you. They will listen to you, and having good communication with investors is very important. And I'm saying that not only when things are good, but also if there's an issue, if there's a problem, if there's a change of business plan, being upfront, and also ideally seeing things coming, and any issue that could happen, seeing that coming and being aware is a good way to, communicating early is a good way to build a relationship. And how do we attract investors? Pretty much the same way. Thankfully we've delivered on results, and we've grown and continue to. And I think people have noticed at this stage the way we do things has convinced, I think, a lot of people in the real estate industry and elsewhere, just in New York City. So it's a little bit easier than before to build a relationship with investors and others. But at the end of the day, we our mindset is, we're a hungry, fast-growing company, and everybody we need to convince. We need to convince them like it's day one, and it's fair that they would be demanding with us, and that's how we look at the world.
Do you have any kind of filters in place, formally or even informally, that you kind of go through to decide if this is the right investor you want to bring in, or somebody you're not, even though they're offering the money, someone that's not a good fit for you?
Well, many times it's through word of mouth and reputation. So, within our networks and circles. So, that's the first filter. It kind of takes care of itself. But secondly, it's good to do business with people that have either been involved in real estate in the past or have a certain experience, time. I've experienced a certain amount of time with investments. Ideally real estate, but if not others. Investments are investments. You gotta understand there's risk and reward, and both can happen. Many times we just want to make sure we have investors that understand our business model, and we understand them, and we set the right expectations, and we try to have conservative expectations. It's always a good philosophy to try to exceed what we put forth.
Yeah, it made me think of an interview. I think it was with the founder of Lululemon, who was talking about the different kinds of investors and making sure you know which kind you're attracting. That some are very much wanting the short-term return. They want it quick. They want to do whatever they need to do to the business to get as much profit out of it and then move on to the next, versus those that have more of a long-term play that are saying, now we want to build something long-term. We're okay being patient. We see the vision. And he was cautioning, young entrepreneurs to understand the motivations or the goals of the different type of investors that you might be bringing in. It sounds like you guys have nailed that, but I was just wanting that conversation for those listening to the podcast that might be looking at all money as equal. Does that make sense?
Listen, it's a very good point. I'm glad you make it. All money is absolutely not equal. And it's very important to understand who you're taking investments from. And listen, I would be very careful with the quick money. That first of all, at the end of the day, real estate business is a medium to long-term business. That's how you really make the most out of it. and not only for yourself, but also for everybody else that you involve, whether it's your investors, your staff, your tenants, your projects, everything. It all goes together. At the end of the day, that's how we see the world. And then, yes, it's just, listen, here's a big fallacy that we see in real estate deals, specifically in New York City. New York City, the market is primarily a growth market. You have price appreciation here and change in neighborhoods like pretty much nowhere else in the world. That happens very rapidly, particularly in Brooklyn, but also other places. On the other hand, you don't have, this is not a cash flow market here. You don't have enormous cash on cash returns like you would have in South Carolina, let's say, that I know a little bit that we talked about, or other places. So, a very big fallacy in New York City is sponsors, basically people putting together real estate deals, taking, and that happens all the time, actually that happens the majority of the time, taking money at a higher rate of return to their investor than the rate of return of the project. That happens all the time. Let's say real estate in New York, we target 6% cash on cash return. We're very happy with that. Achieving this is very, very strong in New York. We're not going to take money at 10% compounding yearly to put on a 6%, cash on cash return deal. We would be upside down from day one. But we're happy with most of our compensation being profit shares with investors. We're light on fees and anything else that comes with the private equity business. But what I'm saying is this is to your point. The type of money you take will drive not only your behavior but also your own returns and much more. You have to have money and expectations aligned with your business plan in a realistic way.
Yeah. Well said. Well said. I'll end with this just to get to know you a little bit personally. You mentioned Blue Ocean was a great book. I'm always curious at the influences of different personalities and successful people like yourself. Has there been mentors or even books that have particularly made a mark on you as you've grown as a business professional or person over the last decade?
Absolutely. Listen, I've had a great mentor in the real estate business, and who's actually a Belgian American. He's been here for decades, but he's built a great company out of Arizona. We spoke. We met over 10 years ago. We spoke many times over the years. He's helped me a lot. His name is Reggie Winsinger. I'm grateful for our conversations over time. That's great. I've had multiple mentors in my life. I've had some in the sports world back in the days. Coaches and older teammates that helped me just shape mindset in general, and even within my family. I'm involved with some business people. Some people are involved in business within my family. We talk shop all the time. That's always very positive. And in terms of book, I've always liked the books of a gentleman named Bill Pourvu, which was a Harvard real estate professor. Bill Pourvu, who's written a book called The Real Estate Game, and some others, which are really realistic about the business. They're really, matter of fact driven insights that are really a very good explanation for beginners in the business and even seasoned professionals.
Love it. All right, my friends, if you're listening and you're interested in real estate at all, you got to go get that book, The Real Estate Game. Is that right?
That's correct.
Bill Pourvu?
Bill Pourvu, Pourvu.
Love it. Bill Pourvu. Check it out. And Remy, thank you so much for being here today. Thank you for sharing your story and your journey. And I wish nothing but the best and continued success for you, my friend.
Likewise. Wish you the best. Keep up the good work. Appreciate it.
Thank you, sir.